love the channel and find it useful in becoming a happy retiree. Subscribe today. So good morning. Welcome to Money Matters. We're going to go to the phones here. We've been talking about this just dramatic market sell-off, 3,000 plus, more than 3,000 points in really just a week, a little over a week in trading. So it's really obviously caught anyone's attention. There's a lot of, anytime you get a dramatic sell-off like this, I know that it hurts. I do believe that it's an opportunity. The reason it's an opportunity is that the market was very much due for a correction. The fundamentals are still good. And we just went over the fact that recessions are when corrections turn into bear markets. So we get a sell-off and then you go into a recession or an impending recession economically. That's when these sell-offs go from 10 to 25 or more. If we stay out of recession historically, and this is since 1987, we have not, and this is past 87, so the last 31 years, 87 was its own animal. But beyond that, it's very difficult to get a 20+% market correction without an impending recession. And it doesn't look like we're even close to a recession, which means that this pullback stays a correction. Still doesn't mean it doesn't hurt. It still doesn't mean it's comfortable to go through. It hurts to lose money. But if we get to a point where we're down 10, 14, 15% and we start to bottom out, that's what happens in corrections. You call it garden variety. It's still painful, but we live to fight another day. And remember, we're investors, so we have to have a longer-term perspective throughout this. As we close out today, I think the real question for investors right now, as we go through these major corrective periods of time that hurt, they sting. We know, we talked about at the top of the show, that losing money lights up our insular cortex. I think if that's the right I don't know if I'm pronouncing that right. 4 times as much as it does if we're gaining money. So it hurts disproportionately in a disproportional way when things are going in the opposite direction. And the correction that we've had recently, and it's a full correction now, 10% plus. It's been rapid and it's painful, and I get that. But remember that what these corrections are, as long as we're not going into a major recession, they stay pullbacks to some extent, and they don't typically go into bear market territory. That's what history tells us. So without a recession, in the absence of recession, these pullbacks average about 14%, 15%. We're already almost there. You go into recession, that's when they're 25 and 30% corrections in the market. Where are we on the recession front? There's the rule of 10 from my friend Don Rissmiller of Strategas Research Partners. And Don, over many, many years, talks about the rule of 10. The rule of 10. So this is an easy thing to remember for today. Here's how the rule works. Is the economy is more apt to enter recession when the average mortgage rate combined with the average cost of a gallon of gas is more than 10. So if we're above, you add those two together, we're above 10, we're likely going into recession. We're under 10, we stay out of recession. Let's look at those two numbers. What's the average 30-year mortgage rate today? Well, I just looked this up this week. It was 4.4%. Let's round that higher to 4.5 because I think we're going higher to 4.5. The average gallon of gas right now in America is $2.60. Again, probably going higher, but let's keep it where it is today of $2.60. Let's add those two together. The number that we get to is 7.1. Comfortably under 10, safely below 10. Now listen, this is a rule of thumb, but a good reminder that high gas prices, high mortgage prices ultimately lead to taking the shine off the economy. Listen, U.S. conference leading indicators, continued expansion. ISM manufacturing in a continued expansion. U.S. unemployment headed lower, not higher. Wages moving higher, but not dramatically. Small business optimism continuing to expand and in positive territory. So I just don't see a recession on the horizon anytime soon. And that's what really matters as we go through this painful and difficult market correction that I believe stays a correction and not a bear market. Nobody has a crystal ball. We don't know for sure. But let's continue to monitor this because recession, fundamental economic numbers, that's what really matters. We'll continue to monitor that right here on WSB. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.